Tesla is going to lay off more than 10% of staff globally as sales fall. Tesla will lay off more than 10% of its global workforce, an internal memo seen by Reuters on Monday shows, as it grapples with falling sales and an intensifying price war for electronic vehicles. And specifically, what that internal memo said was this: as we prepare, and this is sent out by Elon Musk, as we prepare the company for our next phase of growth, it is extremely important to look at every aspect of the company for cost reductions and increased productivity. Tesla CEO Elon Musk said in an internal memo cited by Reuters, which this publication referenced in the first report. As part of our effort, we have done a thorough review of the organization and made the difficult decision to reduce our headcount by more than 10% globally, the memo said. And this is important that CNBC was unable to independently verify the memo when it's reached out for comment, and we'll probably learn more of that later this week. Now, I think anyone that's kept up with Tesla or Tesla-based news is not exactly surprised by this. It's been a rough several months for Tesla's stock price. As you can see, they basically peaked in July of 2023, just looking at the last year, and they've had a pretty significant decline by then, down 41% from there. And that's a lot to lose out on when you are a company like Tesla. But it's not just the stock prices that's performing badly. The actual business aspect of Tesla is also not performing particularly well. As you can see in this article from Yahoo Finance, Tesla quarterly deliveries declined for the first time in nearly 4 years. And we can jump down here and see Tesla's deliveries declined by 8.5% in the first quarter to 386,000 vehicles from a year ago. And the company produced 433,000 vehicles during the period. Wall Street had expected Tesla to deliver 454,000 vehicles, according to the average projection of 18 analysts polled by Visible Alpha. And this is a pretty horrible look because investor confidence in Tesla was already dropping, as you can tell by their stock price being down so much so recently. But it's not just specifically a business and manufacturing and deliveries problem. It's also a competition problem. See, Tesla had a plan to offer really low, affordable EVs in order to be more competitive in the market, but those plans were actually canceled. Tesla is reportedly canceling plans to build a sub $30,000 compact electronic SUV. Reuters reports that Tesla is ditching the affordable new model as the company shifts focus towards its driverless robotaxis, and we'll talk more about the robotaxis in a bit. But essentially, Chinese companies are really good at building very low-cost, affordable electronic vehicles, and initially Tesla looked like they were going to try and compete with that because Teslas and most other electronic vehicles are really expensive. So if Tesla could build affordable ones, it would become more available to the masses, and it might help EV adoption move along, which would make Tesla a ton of money. But this cancellation bodes very poorly for Tesla, as it's become obvious that Tesla does not think they could offer competitive low-priced electronic vehicles. Now, I said we talk about the robotaxis, and that was this announcement last week. Elon Musk announces Tesla will unveil a, quote, robotaxi on August 8th. And to my knowledge, this has not been unveiled. I looked through his Twitter at all of his tweets since August 8th, and I've also scrolled through Google headlines and news articles trying to see if anything was unveiled. If it was unveiled and I missed it, please absolutely leave it in the comments. I'll pin any corrections that I need to. But they're pivoting away from what they're known for in the terms of, the Tesla vehicles that people know and love, towards this kind of robo-taxi, which seems like a desperate move. Even if it's a good idea, a company pivoting totally away from one thing after they're doing badly and towards another is not always a good sign. But aside from the business issues of the deliveries dropping and the competition issues of Chinese manufacturers being able to afford much, much cheaper, more mass-producible EVs, there's also a reputation problem, specifically a reputation problem with Elon Musk. And before we get into that, if you enjoy these kind of daily business news updates, I post almost every day except for weekends, I'd love a subscription. Now, specifically talking about Elon Musk's reputation, you can see The Verge put out this pretty good article not too long ago. Elon Musk's reputation is falling, and it's taking Tesla with it. Elon Musk's controversial reputation in recent years is very likely to be a contributing factor in Tesla's declining sales, according to corporate reputation tracking firm Caliber. Survey data reported by Reuters found that Tesla's consideration score, a metric used by Caliber to track consumer interest in brands based on how they respond to the prompt, "I would buy or continue buying products and services from Tesla if given the chance," has fallen to 31%, and this is huge, from its high 70% in November of 2021, tumbling by 8% alone this January. That's an absolutely massive drop. Caliber's consideration score for rival EV producing manufacturers, Audi, BMW, Mercedes, meanwhile, increased significantly during the same period, reaching between 44 and 47%. That is an absolutely massive drop in reputation, and it's easy to understand how that could directly impact Tesla because Elon Musk and Tesla are kind of synonymous. And when you have so many good alternatives available, not even just from the ones they listed, Audi, BMW, and Mercedes, but also Ford, Honda, Toyota, GMC, everyone's making electronic vehicles. There's no shortage of options. So if you personally dislike the CEO of one of these companies because of whatever he tweets or something like that, you can just go somewhere else and purchase a comparable EV from a rival brand. It's a pretty frictionless process to switch from one EV brand to another EV brand. And so when people look at Elon Musk and for whatever reason dislike the way he's representing himself online, they're gonna make that switch. Now, layoffs generally cause a stock price to go up, but as you can see in this instance for Tesla, it's caused its stock price to go down pretty significantly, 2.8% just this morning, with about 1.2% of that being in pre-market trading. But that's because there are basically two kinds of layoffs. There's one kind of layoff that signals that a company is narrowing down its focus to something that's profitable and eliminating unprofitable things that it had been trying to see if they would become profitable in the future. And as a good example, you could think of something like Facebook laying off its metaverse staff. They make a lot of money on their advertising end of things, and Metaverse, which had been losing them billions, they cut the people from that. And as such, they knew their profits would go up, and investors had more confidence because the money they were pouring into the metaverse would no longer be poured into the metaverse. It would now be poured into something much more profitable for Facebook. And so that increased consumer and investor confidence, and the stock price went up. And then there are layoffs like this, which kind of signal more of a desperate attempt to try and pivot away from something that's not working well, to try and salvage your stock price and investor confidence to make your company look a little better before the end of the quarter. And it looks like the market, according to this 2 to 3% drop just this morning after this announcement, has labeled this as kind of the desperate type of layoff, which does not signal good things for the company, but rather signals kind of a floundering, sinking ship. Now, to be clear, Tesla is not out of the fight yet. It's just looking pretty bad for them in the short term. However, as more news comes out, I promise to keep you updated. Thanks for watching.